The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. E.G. Tax.
It's Ask the Tax Lady with Esther Gulius and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're going to spend an hour today making you smarter than the average bear, I'll tell you. And let's face it, we're now in the middle of September. Not too much time is left before this tax year is coming to an end. So we're going to talk today about what's taxable income. There's a bunch of money that you're getting that isn't taxed. We talked last week about cryptocurrency, and we're also going to talk about just how your tax return is constructed. Because a lot of people, if you pulled out your tax return right now and followed along, you would say, "Wow, I didn't know that." And so we're gonna help you with that. But my friends in studio with me are Christopher, Fabian. Hey, Chris.
Your compadres.
Hello, Esther.
Yeah. And then his compadre, Tiffany Fabian.
Hey, happy Saturday.
You know, and yesterday something really swell happened.
Yeah.
You were dealing with a client who was very sad because she owed so much money and bad things were in her life. And the great thing is she came in, you were helping her, and what did you discover that really changed her life?
Yeah, so this lady is so sad. We were so sad, and we were talking, and regrettably, her ex-husband passed away, and we were talking about how sad her kids were, and she doesn't have a lot of money, and so I was like, geez, or actually I got to step in and say that my husband reminded me, and there's survivor benefits. If she was married for more than 10 years to the gentleman, she could right away start collecting on his Social Security.
Right.
But the thing is, nobody tells you that, and so she wouldn't know if she didn't come in and have like that almost financial checkup with us, and so she was in tears because she can hardly pay her rent and
so if she gets $2,000 a month as a survivor, and she didn't know she qualified.
Yep.
And for 20 years, it would be
more than
$480,000
almost
that you got her.
$500,000.
Thank God, because she came in and talked to us. And so it isn't just even taxes, because technically Social Security is something that, we help people with, but this is part of having that second opinion, walking in and just talking to somebody. And this is a major change. And so I'm so happy that we were so effective for this person.
Yep, that was the best part of my day yesterday.
Yeah.
Hands down. At dinner we always say, what was the best part of your day? And it was a stressful day at work, and I said, well, geez, having dinner with my family. But later on, after I called her later in the night, and that was hands down the best part of my day.
That'll change your life.
And the sad part is I was talking, to Chris, and nobody mails you a letter. Social Security doesn't mail you a note. So effectively, she would have gone.
But that's how the whole tax structure is made. That's why it's called a voluntary income tax structure.
Right.
Because they don't send you the tax return. You send them the tax return. And so the burden of proof rests on you to make sure that you do everything that you possibly can. And you can be sending in something incorrect, maybe not technically incorrect. I mean, you're getting a mathematically correct answer, but there might be something in the code that you're missing completely, and if you don't let them know, they're not going to send it to you, right?
Correct.
Okay.
That's right.
I just spent 1 hour unsubscribing emails. It's just unbelievable how many emails I get.
Yeah, you scroll down to the bottom of it.
Right. So for those of you that get lots of emails, at the very bottom of each page that you get that's emailed to you, there's a little thing to unsubscribe. So I did that today. But anyway, I'm Esther Gulius, the tax lady from EG Tax. How about our tax goal? It's almost almost upon us, right?
Yep, a couple more weeks. It meets twice a week, either in the mornings or evenings at several locations. It's free of charge. You do have to purchase the book and the workbook, but it's a great opportunity to learn taxes from A to Z. We also have an online option, and the hope is that you'd come to work at one of our 32 locations, and you'll be the hit at every party because you'll know things that nobody knows, right, Chris?
That's for sure.
Yep.
Not that we're not trying to get people to know.
But
right?
if you want to register, you can go to our website, egtax.com, or you can call 632-7886, and we'll mail you or email you a registration form.
Okay. I'm Esther Gullies, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. So a lot of people don't know that there's a lot of money that's out that they're getting, and they don't pay taxes on it. And I thought I would talk about that because if you can get tax-free income, that's a lot better than getting taxable income.
Oh,
Duh.
yeah. Oh, yeah.
Right?
Yep.
Duh.
Yep.
So part of that would be like life insurance. My sister-in-law the other day, her son passed away, my nephew, and she ended up getting $78,000 in life insurance, and she called me up and said, how much do I have to pay in taxes? And I said, Janet, there's no liability. That's tax-free money if
Yeah.
it's life insurance.
Yay. I mean, it's a sad incident while it occurred. And yeah, it's same with this.
And she said, I would rather have Jimmy than anything, but it's
pennies
a
from
windfall,
heaven.
right?
Yeah, same with that lady that I was doing the return for. The at that person's employer, there was life insurance, so the two daughters got to split about that same amount of money, which was
Right.
game changing for them who have student loans and things like that.
Right.
With that being said, student loans, I think the first payment is October 15th. So make sure you get your ducks in a row, and if you need help with it, let us know.
Okay. Child support. A lot of people are paying child support and receiving child support. Paying child support is not deductible. Receiving child support is not taxable, and neither is alimony if it's a post-2019 divorce decree.
Oh,
Except for New York State.
Except for New York State. That's exactly right.
Yeah, it's the opposite.
Wait, Chris was saying
I
something.
got a funny story there. We had a client the other day call, and they were legally separated in 2018, signed by a judge that he had to pay X amount of dollars in alimony. And now the divorce came final, and he's like, can I still write off my alimony? And we're like, well, yeah, but wait, did it change at all? Did the terms change? He goes, yeah, I'm saving $100 a month. And he said, well, sorry, it is not deductible anymore because
Right.
the terms changed.
But on New York State, it's
On
deductible.
New York State, right.
It's deductible to the payee, and taxable to the recipient. But on the federal return, it's neither deductible nor taxable. Right?
Right.
Right. Another thing that's tax-free is disaster relief money, like from FEMA. And employer assistance programs such as adoption and or education that they pay on your behalf, up to $5,250, or term life insurance up to $50,000 from your employer. So that's also tax free. And another big one that if you take a look on your W-2, you'll see a large number and the what box is it? Like box 14, or for your health insurance. And that's tax-free too. And people don't realize how much health insurance they're having paid on their behalf, and it's tax-free.
Yeah, which
Yep.
is wonderful, which is
Right?
great.
Energy conservation subsidies. So if they give you money to do solar, that would be tax-free. Foster care benefits. Many times people are taking foster children into their home, and that's a tax-free benefit. Social services. So if you're on welfare, receiving food stamps, Medicaid, and Medicaid can be a gigantic benefit, right?
Yep.
completely.
Before we were
Completely tax-free.
on air, I was on Facebook and I saw somebody has a GoFundMe. So how about the money you receive from GoFundMe? Is that taxable?
All right, I'm getting that in a
getting
minute,
there.
but that's a
Okay.
gift. And anytime somebody gives you a gift, not for services rendered, but truly it's a gift, that's not taxable to you. However, many people think that if they give money through a GoFundMe, they think that that's tax deductible. Is it?
No, because it's not a 501c.
Not unless it's a 501c3 and it has to go not specifically to an individual, right?
Correct.
Right.
All right. All right. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. We're going to take a short break. We'll be back with your comments, questions on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back.
I love the Buffalo Bills. I hate the agony and the ecstasy. I have to take an extra aspirin while I'm watching them to make sure my heart doesn't flutter too much. But they're going to play again tomorrow. Yes.
Yeah,
Yes, they
first
are.
it's the opener.
Home opener.
Yeah. Anyway. All right. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. We got a text.
I heard,
What's the
yeah,
text?
before we go to there, I heard parking at the stadium tomorrow might be a little hairy because they've got the new one being built, and so they got to figure that out. So tomorrow they're going to figure that out together, right? The text says, Esther, you said life insurance is tax-free, so if I cash in my life insurance policy, is that tax-free?
Yes, as long as it's life insurance. But if it's
gain.
you have to be
The
very
gain.
careful because sometimes there's an Are you okay?
Oh,
What are you saying, Tim?
Chris,
Yeah, well, if there's growth and you cash
Well,
it
that's
in
what
while
I
you're
said.
alive.
I was just getting there.
Yes.
If you guys would let
sorry.
me finish.
Yeah.
If it's just a life insurance policy and you get an accelerated death benefit because you're terminal, for instance, and you take that money out, then it's tax-free. However, if there is a benefit attached to it, like whole life insurance, where there's an investment component, then the difference between what you put into it and how much it grew would be taxable. But the actual death benefit is tax-free.
Right.
Very well
Did I do
said.
good?
You
You
did
did
good.
good.
And you
Thank you, guys. I
wrapped it up
appreciate
with
that.
the
You're
bow.
hired for another week.
Thank you so much. All right. Other things that are tax-free is financial gifts. So if you give, many people don't even realize they can give whatever they want to whoever you want. And it's not going to be taxable to the recipient, not deductible to you unless you're giving it to a charity. But if it's more than $17,000 per person per year, then you do a gift tax return. But unless you have an estate like over $13 million, it won't make any difference anyway. Right?
Correct.
Okay. Personal injury awards and benefits. So you see everybody, the ambulance chasers, the money that they get you for personal injury, that's tax-free money.
Yeah, that's right.
So when you see the commercial on TV that says they got me $33 million, then after they took their 1/3 cut, the rest of the money was tax-free.
Slip and fall. Yep, that's
So,
right.
That's
right.
Get hurt. Cash received due to an inheritance, if it's not a pension, it's not an IRA, it's not stocks, then the cash that you receive is just tax-free. If you had stocks or other capital assets, then you get a stepped-up basis, provided it isn't in an irrevocable trust, right?
Right.
And so that ultimately, if you sell it right away, would be tax-free. But if it's in an IRA or annuity, taxable,
case.
unless it was a Roth,
Right.
right? Federal interest received on municipal bonds, that's tax-free on federal and state. However, in New York State, if it's a non-New York State municipal bond, then
It's taxable.
on New York, right?
Right.
Proceeds from the gain on a personal residence up to $250,000. If you're single, $500,000. If you sell your house every 2 years, it's tax-free.
Wow. Yeah,
Right?
and the market right now is crazy hot,
Right.
So
Roth IRA income tax-free, provided you meet those age requirements. Scholarships that pay for a degree candidate, tax-free. Workers' comp, tax-free. VA benefits, tax-free. Debt cancellation if insolvent or in a bankruptcy. So people don't realize that when you have a debt cancellation, it can be taxable, but not if you're insolvent or you went through a bankruptcy.
Yeah. So, for instance, if you have a credit card and there's $20,000 on it, and you call the company and you're like, I just can't afford to pay. And so they settle it for $2,000, $18,000 at the end of the year, you're going to get a 1099 for. And so that would go as other income. But as you had said, if you're insolvent, you do a Form 982. And if you're truly insolvent, you don't have to pay tax on that
Right.
forgiveness of income.
But if you and the thing is, a lot of people don't know what insolvent means. It means that you have more liabilities than you have assets at the time of the debt forgiveness.
Correct.
So if you're somebody that has paid taxes on debt forgiveness and you were technically insolvent, we can help you with that problem too, right?
We can. Yep. And should look at
Okay,
that.
reverse mortgage money. And reverse mortgages were like dead in the water during tax season because interest rates at that point in time were so low that none of the banks would have made money off the reverse mortgages, but they're back.
Yep.
And so if you're somebody that's a senior who's living in a home and you want to stay there and you're tight on money or you have a mortgage, if you do a reverse mortgage, and this is not for everybody, but it is an answer to prayer for some people. They'll pay off your existing mortgage, and then whatever extra excess equity you have, they will give you like a little checkbook. And as you need the money, you can write a check like a home equity credit line, or you can set up periodic payments or take a lump sum, but that money would be tax-free to you. So reverse mortgages.
Yep.
Let's
Should
see.
we
The other,
go to the text?
well, I got two more to
I knew she wanted to finish
I
her
mean,
list.
I'm going to get through my list, and then I got other stuff, okay? Social Security, if that's your only source of income, tax-free. Loans that you have tax-free. Inherited assets with stepped-up basis, I talked about that, is tax-free. And actually, there's more, but this is much a popular list. So that's what is tax-free. All right, let's go to text.
Okay. You want to read it, Chris?
Sure. It says, are long-term capital gains from the sale of stocks included in combined income when calculating the percentage of Social Security that is taxable? Thank you.
Well, yeah, all when you're figuring out whether Social Security is taxable, you take all of your income and half of your Social Security and add it together, and actually including tax-free municipal bond interest is also included in there. Then you add that all up and you subtract it from either $25,000 if you're single, $32,000 if you're filing a joint return. Then the answer, after you do that, is how much your income is over that threshold. Then half of that, up to 85% of your Social Security would be taxable. But yeah, it's calculated in there.
That's
Yes.
right. It is.
Right.
Yep.
Yep.
So I'm still working, right?
Yes.
Okay. All right. I'm Esther Golias,
Wanna
the
go to
tax lady.
Joe.
8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. I know we got another text.
Caller.
Caller. Oh, caller. Okay. Hi.
Hey, Joe.
Hello?
Hi,
How
Joe.
you doing?
Good.
Yes. I have a question. I, in this past year, installed a new electric hot water tank, a new air conditioner heat pump system, and I was wondering if there is a tax credit or a tax deduction for those expenses.
Okay. You guys want to talk about that, or you want me to?
Well, because it is a tankless, the hot water does qualify.
How did you know it was tankless?
He said.
Oh, he said tankless?
No, it's a hot water tank.
Oh, I thought you said it was a tankless. Sorry.
No.
Okay.
So the question is it an Energy Star high SEER rated hot water tank?
Yes.
Okay, so next, Chris, you want to
Okay.
go on?
And then your heating system, was it a geothermal pump,
No.
they call it? It's just a regular furnace, air conditioning unit?
And heat pump, yes.
What's AMG?
What's
And
a
and.
heat pump if it's not a geothermal?
Well, a heat pump is a system where instead of using a gas furnace, you heat your house with the electric heat pump.
So you have an electric furnace.
Correct.
Is it Energy Star rated?
Oh, yeah.
Well, you have to go on the federal website, get to see what SEER levels qualify, and then you would have to see if your new equipment you installed in your house qualifies.
Okay.
Okay, but the new clean energy credit for heat pumps is up to $2,000 federal tax credit. So if you have an efficient heat and cool and it does your entire house, is that correct?
Yes.
Then the credit is up to $2,000 that you can take.
Okay.
So it's 30% up
is
to 2,000.
Is there a form I should look at?
Yeah, what do you know what the name of those forms are? I mean,
Well, the energy credit is the
50, yeah,
56.95, but the
Repeat.
energy
56.95.
56.95.
But wait, let me see if I can get the new form number. Hang on. I think they got a new form number. Let me see.
She's Googling it right now.
I'm Googling it, yeah.
But I know for the longest time, under the old credit, the Sears, for instance, the air conditionings around here, the Sears
Didn't qualify.
But hopefully, so go and look at the Sears unit that you have and find out if it's applicable. And Frank is telling us we got a break.
Oh, yeah, we got news coming up.
We'll put
I'll
you
give
on
you the
hold.
form number on the other side of the news. I'm Esther Goliath, the tax lady. I'll talk to you on this. It's a 56.95.
Still
All right.
56.95.
Yeah, 56.95. I'll talk to you on the other side.
We are family. I got all my sisters with
Hey, to us, you are family, and we want you to think of us like it's your buddies up the street, because we are your buddies. So if you have any questions, we want to help. And by the way, if Joe's still on the phone, it is a Form 56.
He's back on with us.
You back on, Joe?
Yes, I am.
Okay. Yeah, so it's the same form number as in the past. It's a 56.95.
Yeah.
Thank you very
and then
much for
Chris,
your
You're very
help.
welcome.
Chris
but-
wanted to say something else.
Yes, sir.
Yeah, so I'm on EnergyStar.gov, and it says gas furnaces and oil furnaces qualify. And the gas furnace has to be greater than a 97% energy efficiency.
Okay, very good.
But
Thank
and of course, but he's got the heat pump.
But not a
So-
geothermal heat pump.
Correct.
It has to be geothermal.
It's
So
got
you
to
don't
take
have
the
a
heat from the ground.
all
He
right,
has
so-
an electric furnace.
Okay, so it's a solar. This is the qualified clean energy property. Solar water heaters, geothermal heat pumps, battery storage technology. That's what qualifies for the $2,000 expenses. Wind turbines, fuel cells, solar electric panels, solar water heaters. So what you need to do is contact the firm that put it in to make sure if they would know if it qualifies or not. But it's 30% up to 2,000.
Very good. Thank you very much.
Thank you. Okay, what else we got here?
Linda in East Aurora.
Hey, Linda.
Hello. I have a question about savings bonds.
Yeah.
I inherited a bunch of EE savings bonds, and my name was not on them. My parents are both deceased, and I'm an only child, and I cashed a group of them in 2015. But now they're telling me, the bank, that I can't cash any more unless I have an executor paper.
Okay, so you're saying that the Treasury Department says no more till we have proof that you're actually the heir,
But the
correct?
executor-
Well, they got to be.
Treasury
executor
Department.
passes away
It's-
after.
it's
So have you
local
gone
bank.
to your attorney?
I'm going to have to go to an attorney, and
Right.
they suggested that they reopen the case. the will.
Of course, right. So once you get that certificate of appointment from your attorney, then you're going to provide it to the Treasury Department, and everything will go fine. But you got to go talk to your attorney first.
I understand. Thank you, Esther.
You're
Yeah,
welcome,
there's
sweetie.
no
Thank you.
no other way to do
Well,
it.
besides the estate cashing them in.
Right.
At the time of, the estate might have to cash them in since her name wasn't on them.
But if it all, I mean, sounds like a long time ago. So I think the best place to start is with her attorney, who, believe me, if there's an estate to be done, the attorney will do it, right?
Yep.
Yeah.
All right.
Because
I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930.
because Esther and Chris, correct me if I'm wrong, but after the person passes away, the executorship passes, right?
Well, no. Well, the power of attorney.
The
passes.
power of attorney passes.
Right. Then you become an executor.
Then you become an executor.
Right.
Yeah. Do you want me
So
to read?
before you pass away, you have somebody that you would appoint when you go bye-bye,
Right.
but not until then.
Right.
Right, but I would almost make sure, though, part of the elder care would be make sure you have a TOD listed on your savings bonds.
That's true. Which means what?
A time of death, it gets transferred
Take
to-
out the dog?
Yes, take out the dog.
Right, transfer upon death, right?
Yeah, and a lot of things are all done electric nowadays, and so it's not paper. Electronically. So now you have to go to treasury.gov, and you have to create an account and switch your paper ones over.
Speaking of which, we will help you with that. I want to tell you something. We're marching. As a matter of fact, I read an article the other day that's by 2025 to 2030, they're going to eliminate currency in favor of digital currency. And so if you can head off some of this stuff, like creating your own account at the IRS, we will help you with that, because once they make that determination and people have to surrender their currency, because like surrendering gold and precious metals when we used to be backed by the gold standard, I mean, it can be kind of hairy. So if you need help with establishing your account at the Internal Revenue Service, we will help you. And it doesn't make you get audited. It just makes it really much better for you in dealing with your own account.
Yeah, and same with bonds, treasury bonds. You have to go to Treasury Direct, and you have to establish an account, and you have to convert all your paper ones to electronic. If you want to add a TOD, as Chris was saying, that's the way you got to do it now.
Okay,
There's
and-
a large
yeah.
text.
All right, let's do the text.
Dear Esther and crew, I own 50% of an S corporation. If I were to sell my stock, would I have to pay income tax on that? Also, any suggestions on where to shop for a reverse mortgage if I were to consider that option? FYI, I am 62 years old and I'm considering taking my Social Security soon. So
Okay.
50% owner of an S Corp, if he were to sell his stock, would he have to pay tax on it?
All right, Chris?
Oh, well, you first got to see what you're selling it for and then what your basis is in the S corporation, if you still have a basis. Because then you would pay tax on the difference. So if you had a $10,000 basis, you sold your stock for $85,000, you would have to pay tax on $75,000.
Right. So many times there's no basis left in an S corp, because many times when you're back at the beginning, if you're a 50% owner, one would usually say, well, he was back there at the original starting, and when everybody put their money in to get the corporation going, so many times there is no basis unless you signed on some of the debt. Like, for instance, if you are on mortgages or anything like that, that increases your basis, right?
Yeah.
Right. Yep.
So it all depends on how much non-deductible, in other words, that you have not used your money that you put into the corporation for operations. If it really truly is set aside, that would be your basis. And then from the money you get would be your gain or loss, and it would be a capital gain or loss.
Yep. And then do you know
reverse mortgages,
where to shop, where to consider?
Yeah. So if you go to, I'm assuming you're going to be somewhat computer savvy, but if you Google reverse mortgage lenders, you're going to find that, there's all kinds of banks, Lending Tree, some of these bigger digital banks can help you, but like Lending Tree, Longbridge Financial, Fairway reverse mortgages, and if you go to Bankrate will tell you where some of the best mortgage lenders are. Let's see, AAG has reverse mortgages, so that's what you would do.
Yep. And then collecting Social Security is a good idea. At 62, he's not full retirement age, which means he can't make more than like $21,000.
Almost $20,000 if he's still
$20,000 a year. So if he makes more than $20,000, he'd have to pay back $1 for every $2 is over. So this gentleman can always give us a call at 632-7886 during the week, and
happy to help
him. There's another text. You want me to read it now?
Yeah, please.
You want to read it, Christopher?
My income is likely going to be higher than I estimated. Is there a way to estimate how much I'll have to pay back for marketplace health insurance?
Well, you're getting a subsidy.
Yeah, he could
then.
still go on and
Turn off his subsidy.
Right.
And that
I
will
mean,
help.
that's what. But yes, can we help you with that? Sure. Just give us a jingle. We'll put it all into our computer, and we'll let you know if you're going to be stuck having to pay back that subsidy.
Yeah, but smart to start thinking about it. And if I were you, I would increase your 401k contribution. Also, if you have the option of a flex spending account, put as much money as you can into a flex spending at your employer.
Because all of that reduces what shows up on your tax return.
Exactly. And
that reduces the amount you'd have to pay back on that subsidy. But I'll tell you, if you know you're at a place where you shouldn't be getting a subsidy, I think Tiff said, turn it off.
Yeah, and sell some losing stocks if you have any losing stocks. Anything you can do, but turn it off and give us a call, and we could tell you exactly what it's going to cost you. I can't tell you how many clients, when this happens, they're holding the bag at the end of the year, and when somebody tells me they get health insurance through the marketplace and they have a calculation form that we have to enter, I'm like, oh, cringe, right? Chris?
It's yeah, but I mean, if you don't have a pension, there's still always IRA contributions. Right. If you're working, so there are other things to help, but
but here it is. I mean, it's already September,
middle of
right?
September,
so he's only got October, November, December, 3 months. If his subsidy's $500, that's $1,500 that he's adding that to his liability potentially, right?
Yep.
Yeah.
So you give us a call. We'll be very happy to help you. Okay.
That's right.
I'm Esther Gillies, the tax lady. 8030930, 8030930, star 930 on the cell phone, and our text number 716-8030930. What we're going to do is take a short break. We'll be back on the other side with your texts, your questions, comments. I'll talk to you in a minute.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now, the bills are making it happen now.
I hope so. Oh my gosh, I hate it. I hate thinking about Sunday because of this. Anyway, before we go to our calls, 8030930, 8030930, star 930 cell phone. So, dealing with all of these tax-free things, if you need money. And who doesn't need money? You would go to the pool that isn't going to be taxed. For instance, if you wanted to take money out of your 401k plan, and let's say that you're over the age of 59 and a half, so you're not going to have the penalty, but you take $40,000 out of that, you're going to end up paying around $12,000 in taxes to the state and the federal. So it's costing you $12,000 to get $40,000.
Yeah.
But if you borrowed against your 401k plan, you do it for free.
Pretty
free.
Cool.
Free is better than $12,000.
And then
right?
the interest, when you're paying it back, it's
You're
your
paying
interest.
yourself.
You're paying
Right.
yourself.
So if you have multiple pools of money, such as savings accounts, IRAs, 401ks, or investments, use the non-taxable pool first, like a savings account. I'll say to people, you have money in your savings account, you want to pay off your credit card, use that. Well, I really don't want to deplete myself. It's the same.
It is.
I mean, if you take it out of your 401k plan or you take it out of your savings account, it's the same. But the one out of your 401k costs you money. So that one hurts. So take it out of savings accounts, then investments. Why investments versus a 401k?
Because you have a cost basis, and then if it's capital gains, you have a reduced tax rate on the
Right,
federal.
because capital gains are cheap taxes, right?
Yep.
So first out of your savings, then out of your investments, then your pensions.
Yep. If you're in the 15% or lower tax bracket, you don't pay any capital gains, which is great. Do you want to go to Mike or Ron?
Let's go to Mike. Hi, Mike.
Hi, I have a question. Next year, I'm going to start taking my money out of my IRAs and 401ks, and I've been working on a side job and setting that money aside with an IRA. Once I start taking money out, can I still have an IRA, or is that illegal? And if so, should I do it?
No, and I think this is a great question, really, because people don't know that. Let's say you have 2 full-time jobs, and some people do have 2 full-time jobs. In job A, you have a pension plan, and some people think they can't have a pension plan at job B. That's not true. You can have a pension plan at job A and a pension plan at job B. Let's say that job A you no longer work for, and you have a smaller part-time job with no pension plan. You can then, even though you're collecting on your pension, you can still put money, as long as you have wages or some type of service where you might be self-employed, you can still put money into an IRA.
So if you have you're still going to have wages, right, Mike?
Yes.
Yep. So you should be fine unless your income is too high and you're covered by a qualified plan at work.
But you won't have a qualified plan, right? Because you're going to be taking your money out of your pension, right?
No, right. And then also, like I say, I'm going to have to start taking the money out of the out of my 401k, but I'm allowed to still put money into an IRA.
As long as you're still working and you're not covered under a qualified plan. If you're under a qualified plan, then there's income limitations. So are you quitting your job with the 401k, or are you still going to be working there?
Oh, I'm already retired from that.
All right, so you're retired. So you have another thing that you're doing, right? Another job?
Yes.
And they don't have a pension plan.
No.
Yeah, then you're good to go.
And then
are you married?
Yeah, that's where I was going.
Yes.
Oh, okay.
That's
then
fine.
you can do one for your wife as well.
Great. Okay.
Spousal.
Thank you very much.
All right. Thanks, Mike.
Good planning, Mike.
And real fast before I forget, I want to say, speaking of retirement, we are doing our Ready, Set, Retire seminar again this year. The only difference is it's going to be held with the financial guys at their location. If anybody is interested in attending it, they need to call the financial guys at 633-1515 and ask for Ann Hernan. So Ann Hernan.
And anybody that's gone to our Ready, Set, Retire seminars, those are great.
Oh, my gosh. We get nothing but positive
It's like
feedback.
going to the Taste of Buffalo, but not with food. It's the Taste of Buffalo with your finances.
There you go.
Right? Isn't
exactly.
that true?
That is well said.
And it's all free.
Yes.
Okay, let's go to Ron. Hi, Ron.
Hi. I caught in the back. Did I catch something? I was reading the paper. You talked about something about the change in the United States currency.
Yeah. Mm-hmm.
Well, what is it?
Oh, you want to know about it? Okay. So they're moving to digital currency. And
Well, what happens to my money in my bank account? Is that supposed to be confiscated or what?
Well, hang on. So right now they're saying that everybody should not even be upset about this because we're doing so much digitally anyway. When you do your charge cards, people are paying their bills digitally.
I hardly use a charge card.
But hang on. This is not my idea. This is not my idea. I'm just trying to let people know that this is where they're moving to. So, like for instance, there's many cultures that are not using currency anymore. They're completely digital.
Well, that's them, not us.
I know. So you want to make sure that you talk to your representatives and Congress people, because they're saying that by 2025 they want to come up with some type of form of digital currency. And by 2030, they're talking about replacing paper money with digital currency.
Yeah, and you know that our our legislation is aware of this. For instance, like Tom Emmer, I don't know what state he is. He's introducing legislation to prohibit Federal Reserve from creating a central bank digital currency. So Esther's right. You've got to talk to your congressman. So, for instance, Tom Emmer is introducing legislation to prohibit or limit this from going on. And so your congressmen really have to
Use your voice.
use your voice.
Yeah, I mean, they're really keeping it on the down low.
Wraps,
So
yes.
the United States Central Bank of Digital Currency, it's CBDC, will be the digital or electronic form of U.S. dollar issued by the Federal Reserve. This is under Investopedia.com. So I'm not making this up.
No,
You
yeah,
guys can
it's
go
the
right online and take a look at
It's
it.
a CBDC.
I don't have a computer.
And the
Oh,
thing
well,
about
come on in and we'll pull it up for you.
and what
Where are you located?
Oh, we're at
Tonawanda.
1890 Colvin in
Oh,
Tonawanda.
I
We're
can't use
very
the one in
happy
Derby. I
to.
know it's an outlet in Derby. I know that.
Well, you
Yeah,
can
well-
come during tax season there.
Yeah, don't
Pardon me?
come. But we're happy to show anybody anything. I don't want to make people crazy, but the truth is, this is where they're marching
well,
to.
the thing is that it's a surveillance tactic too, so they'll be able to keep an eye on your money really well, you know.
But that's unconscionable. And you talked about people that own gold. I know somebody owns gold. Of course, I'm not going to use any names, but I think that goes back to 1933. A couple of
That's
days
true.
after inauguration with Franklin Delano Roosevelt. This is unconscionable in my opinion.
Well, but again, what knowledge is power, and then that's why I want when I'm doing the show, I don't want people to panic, but I want you to use your voice and say to your congresspeople, we want. Because if it all goes digital, that would mean that they know everything about you. They know what church you
They
go
want
to.
to control our lives.
Who
And
you're giving.
I'm convinced of it.
Yeah, I know. But thank you for calling.
Yeah.
And if you want help, come on down to our corporate headquarters. We will show you everything.
And then one of my clients texted in. She wanted to give help for the lady who had the e-bonds or the bonds. She said, this happened to my dad a few months ago after his estate closed. We received an insurance check, which wasn't taxable. The lawyer wasn't sure what to do, so I called City Hall Court. They said, no problem. Come in for another executor letter. It was $6. And the lawyer was happy too. So again, she said that they should go to the City Hall Court and get another executor letter.
If one was appointed.
Right.
But if something was never done because it was done so long ago, because really as time has progressed, things have gotten more buttoned up about following the letter of the law, so
Right.
if the parents passed away and nothing was done, then you got to go back to square one.
That's right. What were you going to say, Chris?
Oh, and somebody else texted in, oh, by the way, you can take money out of your Roth IRA tax-free too.
Yeah, I put it in there. That was in my list.
Was
Let
that
me
in
see.
your list? Oh, Chris,
That was
Chris,
in my
oh,
list.
Chris
Let
and I
me see.
missed
Let
it.
me look at my
we missed
list.
it. We missed it.
Yeah, you guys weren't
But-
listening to me.
Yeah, but the thing is with Roth IRAs, you got to remember they have to be in there at least 5 years from the
Right, I
initial
said
contribution.
Roth, but there is a taxable portion if you didn't meet the time restrictions.
Right.
I because that was like 18. There's other things I wanted to explain about how the tax system works. After you come up with all your taxable income, then you reduce it by adjustments, right? Then you reduce it by your standard deduction or itemized deduction. Then you take that liability and you further reduce it by credits. So we'll talk about that next week and give you some how all those credits happen and how all those deductions happen. And really, it'd be kind of cool if you pull out a tax return to follow along, because then you'd say, oh, that's how that all works. And many people might find out that they don't even pay taxes. You get a refund because you're paying in from withholding. So many people with a pension might pay in $5,000 in withholding, and they get back the $5,000, and that's because they don't pay any taxes, and quite frankly, they don't need to have withholding, and they don't have to file a tax return.
Yep. Yeah,
Right?
There's it's so sad. There's somebody that I did a tax return this week because the STAR program, when she has to apply for a STAR to get her STAR, they're requiring a tax return, which is such a pain sometimes for people, right? But you're right. People don't have to file many times and should
And
turn
getting
off their
back to the
withholdings.
clean energy credit, the new energy credit is not the old energy credit. The energy credit before was limited to $500 lifetime. Now the energy credit is 30% of what you do for clean energy devices, Energy Star devices that make your home more fuel efficient. Up to 1,200, and then if you do geothermal, biomass stoves, then that's a 30% credit up to 2,000. So you can actually reduce your liability by $3,200. And I know days are getting a little cooler, and people are thinking, no more swimming pools, and so you might be thinking about putting that in your house. Make sure you give us a call, and we'll give you all the parameters on how to do that. But you can also go to irs.gov and Google clean energy credits, and there's all kinds of stuff on that online as well. So, and don't forget our tax school. You can register online.
Yeah,
Right.
Or
EGTax.com.
calling.
EGTax.com, or you can call 632-7886. If you want to go to the Ready, Set, Retire seminar, call the financial guys at 633-1515 and register at the financial guys.
Yeah, and you can always go to our website at egtax.com. We have archived all of our radio shows on News Radio WBEN, and you can listen to any of our shows. Like this one will be up, I'm assuming, in a couple
Monday or
3
Tuesday.
days, right?
Yep.
So, okay. Well, until next week, I'm Esther Golias, the tax lady from EG Tax, Tiffany Fabian, Christopher Fabian. Go Bills, please God, go Bills, and I'll talk to you next week. Thanks for listening.